Based on the latest available indicators, the Bahamian economy maintained its growth momentum during the first quarter of 2026 when compared to the same period in 2025. This was led by strengthened tourism output in both the stopover and cruise segments, alongside continued foreign investment activities which benefited the construction sector. In the meantime, stimulus from private sector credit growth increased relative to the same period last year. Developments continue to support a healthier fiscal performance and projected employment growth. However, inflation firmed in the latest indicators due to higher imported costs in fuel and other goods and services from geopolitical tensions experienced in 2025. Moreover, heading into 2026, downside economic risk further increased as the war in the Middle East caused a new spike in oil prices. As to tourism, estimated inflows grew at a healthy pace during the first quarter, with a stronger stopover earnings boost than in the first quarter of 2025. Alongside a rebound in visitor volumes, indications are that room rate pricing appreciated for both hotels and vacation rentals. A dominant factor was significantly accelerated non-US stopover visitor growth compared to 2025, benefiting from airlift boosts, particularly from Canada. Nevertheless, limited room capacity remained a constraint on hotels, and continued weakness in the US source market underscored emerging risk given the importance of such demand to sustaining airlift capacity. In the cruise market, overall expansion also remained robust amid ongoing investments in the expansion of private destination facilities throughout the Bahamas. Progressing beyond the first quarter, the central bank's assessment of online booking trends estimates further stopover earnings boost over the next few months based on anticipated higher prices, albeit the volume of stopover traffic could be slightly lower, in line with softened prospects in the US segment and greater negative strain on US consumer confidence from ongoing wars and trade policy developments. Turning to banking sector indicators, the economy's first quarter performance supported stronger foreign currency inflows closely matched by expanded demand for foreign exchange. In particular, the volume of foreign currency purchased by commercial banks from the private sector increased by 12.6% relative to the same period last year to an estimated $2.3 billion during the first quarter of 2026, while sales of foreign exchange, mainly for imported goods and services, expanded also healthily at a healthy 14.2% to $2.0 billion. Given the strength of demand, commercial banks incrementally reduced their net sale of foreign exchange to the central bank in comparison to 2025. However, as the central bank also accommodated a significantly reduced net flow of foreign exchange via the public sector, the seasonal buildup of external reserves was almost 60% stronger during the first quarter of 2026 at approximately $270 million. As at the beginning of May, seasonal gains continued, with the external reserve balances reaching an estimated $3.2 billion, compared to about $2.8 billion at the same point in 2025. These balances are therefore comparatively healthy to absorb sustained private sector credit growth over the remainder of 2026, as well as to accommodate increased usage from higher oil prices. As to private sector credit, the rate of expansion during the first quarter was more accelerated than in 2025, and this reflected stronger consumer lending growth and an almost steady pace of growth in commercial lending. However, outstanding mortgages were unchanged over the quarter. These sectoral trends reflect a continuation of patterns observed in the latest lending conditions survey through the second half of 2025, in which the pickup in private sector credit corresponded to an increased volume of applications for consumer credit and business loans, and an elevated rate at which banks approved such applications. Conversely, both the volume of mortgage applications and the ease at which households qualified for mortgages was reduced comparatively. Overall, lending rates also continued to subside. In particular, the fraction of private sector loan balances on which borrowers were 3 or more months behind in payments, that is the non-performing loans rate, decreased further to less than 5% at the end of March 2026, compared to nearly 6% 1 year ago. Now, as to the economic outlook, the central bank still projects growth in the economy over the remainder of 2026, but at a somewhat slower rate than forecasted for the first half of the year, as more of the impacts of geopolitical risk materialize. This includes continued credit expansion, even if more tempered by caution, as lenders monitor the external environment. Bank liquidity is expected to remain elevated to slightly contracted, depending on the vigor of lending over the remainder of the year, and external reserves are expected to close out the year at a stable to marginally improved level. Hence, the central bank will maintain an accommodating stance for private sector credit. Nevertheless, geopolitical risks, as they exist, impact the economy through varied channels. In particular, higher energy costs from the war in Iran are expected to cause increased inflation directly in imported fuel and in goods and services impacted by higher fuel, such as airline ticket pricing for tourists, higher freight and other transportation costs being absorbed by local businesses, and costlier imported goods and services impacted generally by energy inputs. In all cases, these pass-through are expected to become more noticeable and imposing as the crisis drags on. Moreover, potential disruption to European jet fuel supply chains, if prolonged, could significantly disrupt travel patterns. In addition, there are downside risks contained in the inflationary impacts of the war, and these relate to the financing hurdles for foreign investments and delayed savings on public sector foreign currency debt servicing, as foreign central banks are persuaded to maintain interest rates higher for longer than was anticipated. There are some upside potential, however. In travel, proximate destinations like the Bahamas could offer more affordable substitute for North American visitors confronted with disproportionately costlier travel to more distant destinations. Further, the high-end residential investments and the local construction sector could receive a boost over the medium term as the Bahamian market capitalizes on a safety premium relative to the Middle East. While on balance, risks to the global economy still preclude a potential recession, the central bank remains vigilant in its monetary policy posture against even more adverse outcomes that a deepening or protracted crisis could impose. However, even under worse scenarios than currently anticipated, the external reserves cover is robustly adequate to protect the currency, and domestic banks' balance sheets remain strong and highly capitalized to absorb any setback. Otherwise, our monetary policy therefore remains accommodating for the Bahamas, again supportive of sustained to strengthen credit growth, but poised if necessary to protect the credibility of the fixed exchange rate. Okay, so we'll pause and take questions that you might have.
Good morning, Governor. Are there any, or should there be any concerns, just generally, for the economy as, given we have an election coming, if governments change, especially given that this one is ahead of a budget session, anything like that, any concerns around elections and
No, I think insofar as, where we are in the timing of the election cycle, we've demonstrated that, um, we can get through the the budget process and, the general range of policy issues that matter for the Bahamas. They remain the same, and the institutions like the central bank, which exists, we're here to support continued implementation of policies if once we get beyond the election cycle.
And just in terms of sectors that boost the economy, I don't know that we, in these forums, talk about the financial services sector itself a lot. But from your standpoint, how has that sector been doing? Is it growing? Is it stagnant? How's it?
The financial services sector, insofar as the international component is concerned, is still in a transitioning state. There's a lot of emphasis on how to boost the prospect of the sector, and that is enlisting, widespread participation and input from both the government sector and the private sector. Right now, we're focused very intensively on taking the Bahamas through the process of the Caribbean Financial Action Task Force mutual evaluation, which looks at our anti money laundering regime. That process gets really, really entrenched later in the year, and it is very important for us to demonstrate effectiveness because that impacts our global risk rating as a jurisdiction and therefore the ease at which we do business with the rest of the world. So that is a very important undertaking that is ongoing and it has relevance for the financial sector's outlook. In addition, we are very involved with the assessment of how the Bahamas is delivering on its common reporting standards around tax transparency and the OECD commitments. So that process has a lot of work going on, and we anticipate that by the time as we get into the second half of the year, there will be more publicized understanding of how the Bahamas is done from the assessment process.
And looking at the recent upgrade by Moody's, the sovereign credit rating, you have some sides saying we should celebrate it, some sides saying there's still a cautionary tale to tell about the future. You mentioned, the central bank mentions in its reports that we are going back to our growth rate, or kind of going back to our growth rate potential, which some people say is concerning. From your standpoint, how do we look at a sovereign credit rating increase?
Well,
Improvement?
the sovereign credit rating really considers, the range of positive and negative factors that affect the Bahamian economy's performance and the outlook, and also considers the track record that the Bahamas has in terms of the fiscal policy commitment to generate improvement. So we should take, from the upgrade that there have been some positive movement in the country. In addition, though, there is an expectation that we have to continue in that direction so that we can see even more positive shifts in a credit rating. Because I know that there is an expectation and an objective and push to further improve the Bahamas' credit rating over time. And I think that keeping that focus in mind is what's important.
Do you anticipate that will have an effect on interest rates here in the Bahamas?
The sovereign credit rating does impact the government's cost of borrowing, even in the local space, because investors in even the local currency debt have to factor, what that rating says.
Going back to the inflationary aspect of the rising oil prices, do you foresee the energy prices being affected after this hedge that we currently have in place expires or wears off?
There's still a lot of uncertainty out there as to how the Bahamas will be impacted. Once we get beyond the fuel hedge, you would appreciate that how things look at the point when that fuel hedge is reset is going to be dictated by what the current state of play is in the energy market. So one has to, hope that we make good progress over the next few months in terms of bringing more stabilization to the energy markets. And then I think that would put us in a strong position in terms of potentially renewing a fuel hedge. But it is equally likely that, beyond this period, even, being able to secure new hedge facilities, uh, we should anticipate that likely, we will see some adjustments in the Bahamas in terms of if market prices are not settled to the level that they were when we entered the hedge initially, then some of that is going to be factored into any reset.
Yes, to switch topics, how are things going with Sand Dollar right now in terms of drawing in more users? How is that going?
We are, insofar as Sound Dollar is concerned, we are seeing, some positive trends, but these are still positive trend relative to starting off from a relatively low base of use. We believe that it is important to continue with the work on fast payments because then that integrates the Sound Dollar even more fully into the payment system. And what fast payment will do is it will put all of our payment terminals in the Bahamas within the reach of users of the Sand Dollar.
It was hoped that it could be integrated into tourist spend as well. Is that correct?
Well, insofar as payment service providers and fintech firms, think of use cases that reach out to the tourists, the central bank is fully supportive of those, and that really speaks to us continuing to put in place the right frameworks that allow for innovations around the payments infrastructure. And a focus of that nature is a part of how the central bank views progress over the next few years. So we do anticipate that the environment will be more accommodating to fintechs that can build solutions that offer a lot more options as to how payments are made in the Bahamas.
And have the family islands been using it in the way that you hoped they would?
We are seeing some increased pickup in the Family Island. One of the use cases that is evident in the Family Island is payroll. So some of the firms that have gone into Family Island for construction and the like, they've been very able to very quickly able to onboard employees and put them into the payroll stream because then they can send payments directly into the digital wallet through the clearinghouse, the ACH, from bank accounts. So that's been important. But strategically speaking, we also embrace the importance, medium and longer term, of improving the network that provides access to cash facilities in the Family Islands. And we think that that's a process that will also build off the digital infrastructure to the extent that anyone that has a bank account or other facility will be able to access cash dispensing facilities wherever they exist. And on one level, one of the positive, development that we've seen as a result of the Sand Dollar is that the new players in the market have been very active in putting in place a lot more of the ATM facilities that people can use. So in some of the next iterations, our focus will be on making sure that ATM facilities are more accessible, everyone in those communities.
The asset collateral registry, how far are we away from doing that, or is that, how far is progress on that moving?
We are still making progress with the collateral asset registry. Um, some of the immediate work now behind the scenes is looking at how the regulations for the registry need to be developed and fleshed out. In addition, we're still interacting with the government in terms of the technology, the electronic platform for the registry. So that work still needs to also be advanced. So it is very important now in the immediate next stages to begin to make progress on putting the electronic register in place.
I know that some institutions who were trying to maybe build out some. Can you say where you have to get applications? Are people interested? Is that something that?
Yeah, we do. We at the central bank we do see applications, and I think we have in recent time, applications that have come forward with interest in setting up, local banking structures, um, and so what we engage with them, as openly as possible. Our emphasis is always on making certain that they have very viable, sound business plans that will make those business models, lasting. So we are seeing, those applications come forward, and if we have any successful outcomes, it will be widely seen in the public.
Do you foresee any of them being successful in the future?
I'm not going to speculate, but I can assure you that when people come to us with business plans, we do give them very frank advice in terms of how they should be thinking about what they're doing. But we're not saying no. We want to see people develop plans that can work.
Is there space?
Well, let's put it this way. In the Bahamas, we need to be mindful that this is a country of 400 and something thousand people spread over more than a dozen islands. And the economic center for most viable businesses of scale is New Providence. So we also look at how, business models can be viable, not just in reaching the family islands, but viable overall, so far as things are concerned in the Bahamas. And it's important for viability and growth to express itself as well in terms of expanding the financial inclusion net. If viability is only premised on um, a cannibalistic approach to extracting from existing market shares, all that will do is create work for a regulator like the central bank, because a regulator like the central bank needs to ensure that even if there's a cannibalistic business process, there's stability. So whatever the outcome, we're interested in financial stability, and we're interested in ensuring that whomever has deposits within the financial institution always have the certainty that their deposits are safe. So safety of the deposit in those financial institutions, and how that looks in the context of stability, that's our focus.
Do you think that there would be some benefit or space to creating legislation that particularly pertains to smaller banking operations on the Family Island, smaller, operations that are centered to a smaller base in a more niche lane for
Well,
those areas?
I wouldn't speculate on that. All that I would say is that insofar as the banking sector landscape is concerned in the Bahamas, um, we've been very forthcoming in explaining to stakeholders, what the structural issues are in the Bahamas in terms of expanding the reach of financial services. And those structural issues are the ones that, from a central bank perspective, we're always going to be ready to provide input around. I think that's important to understand, and 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 that's the sort of focus. But insofar as the fact that access to banking is a burning issue, uh, is understandable why it is. Um, it must be appreciated that we have to confront the structural issues, and I think there's a fair amount of documentation as to what those issues are.
How has agency banking been going in terms of rolling that out on the point?
For agency banking, the framework is about complete. We should stress, though, that some financial institutions are already using agents in family islands. And so really, the focus of this framework is to see more of those types of structures, put in place. And what we've sought to do as our framework is to be very clear in terms of what would be the customer service levels, the consumer protection issues, etc., that should come across in any of those types of agency frameworks, as well as to be endorsing of attempts that financial institutions might make, to extend the regional presence through the agency model. So that has really been our important contribution. But we want to also be clear that even before we formalize the structure the way we have, some of the financial institutions are already trending in that direction. So we've really sort of stepped in, to lend even more support and momentum to that process.
Have there been any more talks or considerations about a new home for the central bank?
We've looked at various options. Our priority immediately is getting to the end of the development process for the cash and data center. So that work is very advanced, and we anticipate, in over the course of 2027, that that project will conclude.
Where's that?
The cash and data center for the central bank, it's going to be on Frank Watson Highway. You might have seen it. Just didn't know that it was that. Okay, I think we've exhausted this morning's session. Thank you all very much. We look forward, as always, to seeing you